Welcome to the part two of the two-part series of the analysis of the biggest non-banking financial corporation of India, Bajaj Finance. We saw in part one the fundamentals of Bajaj Finance and concluded that it's a good company to be a part of. Now let's take a look at the technical analysis and see how the stock is, and if you are a long-term investor, at what price you should take an entry and exit. If you are a swing trader, then how you should enter or exit. And if you're an intraday trader, then how you should enter and exit. Now, mind you, I'll be giving you these numbers of when you should enter and when you should exit, but don't take them literally. The purpose of this video is not to, give you the numbers so that you can take those trades. The purpose is to understand how to understand and analyze what's a good price and what's a bad price for you to enter or exit. Um, in one of the previous videos, I talked about predictions, and I said that, do you really need to do predictions? I think that you do not. What you really need to do is you need to try to understand what's a good price to buy. When is a stock cheap and when it is expensive? So when it's cheap, it would mean that there's a lot of supply in the market, there are not enough buyers. That's the time when you should be buying. And when there are too many buyers in the market, it means everybody is buying and there is not enough supply. That's the time when you should be selling, because that means you're getting a good price to sell. The trick that I'm trying to talk about here in these series of videos is to understand when there is a large supply and when there is large demand. What is cheap and what is expensive? So let's get on with it then. Um, yeah, as you can see, this stock since, I don't know, 2004, it's done excellent. It was a little bit, and if you get into the details, you'll see, if you go further, you'll see that the stock was actually doing okay. It wasn't doing really bad. I mean, it was going up and up. But when you zoom out, you'll see that it's not visible that way. It looks as if it was flat, right? But it's not, it never was flat. It just kept on going up. It's just that now it's been going up incrementally. It has been rising at a higher speed. The only down that we see, the only big red candle that we see on this stock is in 2020, and this was the COVID crisis when the entire market crashed. But then, if you can see in the next couple of months, there are some really big green candles, and it's picked up, and then now it's at its all-time highs, right? So we've already ascertained that the fundamentals of this company are good. We've taken a long-term view at the company's capital growth of the stock, how the stock has grown. We've already seen that it's given a bonus and a split. So that means that the asset base must have also increased for all the shareholders. The question is, what time do you get in now? So let's take a look at the weekly chart and try to understand if there is a good level where you can enter so that you can make profits in the future. I can see that there is a basing candle here. There was a drop, and then there is a basing candle here, and then there's a rally. There's an explosive growth up here. So this becomes the weekly demand zone. But we never take a look at one chart and decide. Okay, we take another look at a lower time frame chart, which is a daily chart, and we try to understand where it would be a good price to enter. Now, this is the demand zone that we created in the weekly chart, and I can see that there are a couple of basing candles here, which are decent. I also see there's a gap up here. I would also treat this as a demand zone. But it does look quite far away for me. It's 5,808. The demand zone, the best demand zone that we've come up with so far is at 4,915, which is a little bit far away. It's about 900 points away from our current price, which is high. Let's take a look at the RSI, which is the relative strength index. It's at 61 right now. So it's not very high. I would call it very high if it's above 70. I would call it very low if it's below 30. So which basically means that if it falls a little bit and comes down to probably this level, then there is a demand zone here. I'm going to do a body to wick here, and this is a judgment call really. Okay, sometimes I do a body to wick, sometimes I do a wick to wick, depending upon how far away the price is and how risky it is to buy that stock. So I'm doing a body to wick here because I see that the Bollinger Band is slightly lower than that particular price. So I would want the price to come down as close to the Bollinger Band as possible. And I would want a relative strength index to be as low as possible. Combine that with this demand zone, I think I think this is a pretty decent price for long-term investors, which would be 5,000, close to 5,437.55. This is a decent price. If you get this price, I think you should go for it. Um, However, if you are risk averse and if you would like to not take any chances, I would eliminate this demand zone, bring the entry line closer to 4,925. Of course, it's far away and the market is booming right now, so you'd have to wait a long while, or you will have to wait for new levels to be created, new zones to be created before you can take a call. Yeah. So long-term investors, good, very safe price to buy is 4,925.4. You could probably buy somewhere near 5,400 as well. Um, you'll have to take a call on that. Now, let's look at what would happen if you were a swing trader. Okay, and we're looking at the daily chart. Obviously, a swing trader would need to be should not have to wait for so long to be able to take the trade. He needs the money quickly. Needs to make a profit in the next couple of weeks. I would definitely go with this particular demand zone for a swing trader. But then this is my daily chart. So let's take a look at the 60-minute chart. As I said, always look at two charts and see if there is a coinciding demand zone at that level. Because ultimately the idea is to get your money back in the next couple of weeks itself. Okay? So I see that this is the demand zone here, and there is a gap up also here. Now let's see if we can find a Bayesian candle in the daily chart. This is my Bayesian candle. Now I can see that there is a gap up here, so I will not place my entry line right at the start of the demand zone. I'll keep it slightly up because there's a chance that the price may not go and touch my demand zone because there is a gap up. The price may return from here, so I'll keep it at 5,482 levels. I also see there's another demand zone here, which is closer. Now, considering that this particular stock has been doing exceptionally well and has been trending for the last couple of weeks, there are higher highs and higher lows, so it's been going up and up. I don't mind taking this demand zone as well, and I'll keep a tight stop loss. So I'll keep an entry here, and I'll take the stop loss line and keep it right here. So in case if the price does turn from 5,655, excellent. If it does not turn, and I would have to take into account the relative strength index at that point in time and the Bollinger Bands as to where they are. At this point, the lower Bollinger Band is going up. There's a chance that by the time the price comes down and touches 5,655, it would have also touched the lower Bollinger Band. So we'll combine all those indicators, the Bollinger Band, the relative strength index, and the demand zone, and based on that, take a call on whether we should get in at 5,655 or not. Right? Similar principle applies for intraday traders also. The logic is not very different. We'll take the 15-minute chart as the higher time frame chart for intraday traders. I see that there is, actually there are no levels at this point in time for intraday traders. Unfortunately, I can't find anything. Sometimes you find levels, sometimes you don't. Let's take a look at the lower time frame, which is 5-minute chart, and see if we can find anything there. Not really. I mean, there are a number of Bayesian candles here, but the growth is not really very explosive. It's a gradual growth up, and it's still growing, so I'm not entirely sure. There is a supply zone here, I believe, but it's a very big supply zone, and the price hasn't exploded downwards from there, so no really big, strong red candle out of the zone. So I'm not sure if I would do intraday on Bajaj Finance at this point in time. Yeah? So try to understand how zones are created, how indicators are used in combination with the zones, and there's a very good chance that you'll end up making a good profit. I hope you've enjoyed the content. I'm always looking for feedback. Do let me know if there's an idea that you would like me to cover, or if you disagree with me, do voice it out. Other than that, I wish us all the best, and I hope that we make a ton of money off the stock markets. Have fun.